Most instant analysts out there cover the Holy Trinity: Tesla, Palantir, and SoFi. Here at Nanalyze, we cover over 450 stocks, and about a quarter of those will issue trade alerts on when there's downside volatility only. Why? Because stocks are expected to go up, and when they go down, people that are holding them get worried, and people on the sidelines see there's a potential opportunity to invest in a bargain or some value to be had. So FSLY was raised in our Discord server. All of our paying subscribers that are in that community voted for us to cover this stock, and it seems like there's no better time to cover it than now. And that's because the chart in the upper left here shows you the price adjustment as a result of their weak guidance. So basically growth might be slowing for FSLY and for the broader thesis as well. Now the chart to the right of that, the upper right, shows what might be a COVID-related hype cycle for FSLY. So that's something that we want to pay attention to. And then this chart in the lower right, that's for Cloudflare. We see a hype cycle as well. So we just want to be aware of those things when we're considering valuation. Now, what's interesting about this particular niche is that it's changed over the years. So I can remember when I was little, there were mainframes and dumb terminals. So computing was very centralized. Then we had the emergence of the personal PC. Things became decentralized. Then the cloud arrived and they became centralized again. And now we have edge computing, and we're moving back to decentralization. And the niche that we're going to talk about today for FSLY and Cloudflare and others is mainly content delivery networks, what they call CDNs. So I think this diagram does a good job of showing you how CDNs work. And we use one here at Nanalyze. It's Cloudflare. And what that will do is cache our articles out at the edge. So somebody in Europe that's accessing our content, even though our servers live in the United States, will be able to access cached content close to where they are, and that speeds things up. And when you look at Google's algorithms for their search engine, speed is a big factor they consider. It also helps us save on hosting data costs, because in a hosting facility, they typically charge you for the amount of data that's going through the pipeline. And if you're serving things up at the edge, then you're not being charged for that data because it's cached. So when we utilize Cloudflare over the years that we have, they'll send us these reports, and they're primarily concerned with showing us two types of benefits: performance, and we can understand why, I just described why, and also security. So they talk about all these mitigated events, and you may have heard of denial of service attacks and things like that. So there's some cyber security elements associated with, somebody might try to attack your website with a whole bunch of fake requests and bring down your performance. And also that costs you money, right? If they're trying to access lots of pages. So Cloudflare provides some security around that. Now, when you look at CDN providers out there, this is a great chart. It shows us, it's from Intricately, shows us the main competitors. So somewhere around 89% of the market is commanded by Cloudflare, Amazon, and Akamai. And Akamai's more of a legacy offering. And this isn't blue ocean. So all these firms are having to compete with one another, and things are going to get more competitive over time. And that's where a leader is going to have an advantage. And the chart here shows you that Cloudflare is really dominating small to medium-sized businesses, and Amazon's dominating enterprise there by a little bit. And you see FSLY in this list. That's the company that we want to talk about today. So it looks like they're in 6th place. So the first question is, do we find the CDN thesis compelling to begin with? And again, going back to that comment on 450 stocks, there are a lot of different themes that we cover. And this isn't one that we would find to be necessarily more compelling than others. If we did, we would invest in Cloudflare because they're a pure play leader. Now, when we look at how FSLY differentiates their offering amongst competitors, you see here that they're going for speed. So this looks at latency and throughput, and you see FSLY in the upper right there. So that's the way that they perceive their offering having a competitive advantage. And you can also look to firms like Gartner, of course, you take these with a grain of salt, but these quadrants, we use these to show all the competitors in a particular space. So there's a name there, Imperva. They were acquired, I think, late last year. And you have the leaders, what they say, Cloudflare and Akamai, and then Amazon and Fastly are challengers. So when we look at Akamai versus Cloudflare, again, this isn't a blue ocean, so these firms are largely stealing market share from one another, and Akamai, being a legacy provider, is having their lunch eaten by fast-growing firms like Cloudflare. And the last time we wrote about Cloudflare, I think Akamai and Cloudflare had around the same market cap, $14 billion. 1 year later, Akamai's grown a little bit to $16 billion, but Cloudflare has doubled to $33 billion. Now, while Akamai commands a lot more revenue, this is an older chart looking at quarterly revenues, it's growing at a slower rate than Cloudflare. So what about Fastly? And I think these charts are very telling. So as we said before, Fastly saw 17% revenue growth in 2023. And because these are disruptive firms, you're focused on revenue growth, not profitability, though we're going to talk about that as well. And in 2024, Fastly said, well, we're only expecting 16% at the midpoint. So less growth than 2023. What's more telling also is when you look at Cloudflare's expected revenue growth. That's the black bars you see on both these charts, their expected revenue growth. For Cloudflare, that's going to be their slowest growing year for a while there, you can see, 27%. So the two takeaways here would be that the CDN space seems to be seeing growth slowing down. And also, if you're a laggard, and Fastly is a laggard, just based on revenues and size, you need to be growing as fast as the leader or faster, because Cloudflare is starting to get fairly sizable now, and we would expect their growth to slow. But Fastly's never going to catch them if they don't show stronger growth than Cloudflare, and that's where they sit today. So another measure of spend in a particular space is net retention rate, and here you can see how that's dropped off. On the left, that's for Cloudflare. On the right, that's for Fastly. You see some seasonality there in Q1 for Fastly, but generally speaking, you want to see this number around 120%. And for both companies, it's fallen below that, again implying that in this particular space, spending and growth are slowing. Now, the other thing to consider is the quality of revenues. And to gauge that, because these companies typically won't be profitable, you can look at the potential for profitability, which is gross margin. Look at that nice little steady climb there on the right from Cloudflare. So that's what you want to see. They're closing in on 80% gross margins. That's very healthy.
Well, that's really healthy.
Now look on the left for Fastly. What they're sitting under 60%, though they're showing how they're growing that over time as they scale, of course. And the more that you scale a SaaS offering, the more your gross margins expand. That's why revenue growth is very important for future profitability. And Fastly talks all about this plan to get to, the sort of gross margins that Cloudflare realizes, but Cloudflare is already there. And one of the things that comes into play with gross margin is the likelihood of a firm reaching free cash flow. And all that means is that they don't have to raise more capital, either by taking on debt, which isn't necessarily good. Both these firms have debt. We'll talk about that in a second. But also issuing shares and creating a situation where existing shareholders get diluted. So here you can see Fastly's plan to achieve free cash flow break even this year. So they have $322 million in cash, but if you net that from their debt, they have about $70 million net in cash. So they need to get to cash flow positive, so then they don't have to worry about raising, and that's their plan to do that. Here you can see cash CapEx. So once they have free cash flow from operations, then they'll spend some on CapEx, then that's their free cash flow, right? When we compare that to where Cloudflare sits, it's a different story. Now, sure, this chart is operating cash flows, but I took a look, and when it comes to a SaaS firm, they really don't have large CapEx expenses, right? So for Cloudflare, they're generating a really decent cash flow every quarter, and we look at their net cash. So they have $1.67 billion in cash, but that's offset by quite a bit of debt. So they only have $280 million net cash, but they could easily pay off their debt if they wanted to, and then be growing their cash stockpile and then using that to make little plug-in acquisitions. One thing we've noticed about Cloudflare as customers is that every other day it seems they're offering some new bit of functionality, and that's when you look at the investor decks of these firms, they see that edge encompassing a lot more things than just performance and security over time. Now, when we consider valuation, and this is where one might make an argument for FSLY, though our methodology is to only invest in leaders. But this was interesting. The simple valuation ratio is what we use here at Nanalyze. It's simply the market cap divided by annualized revenues, and we've plotted this over time for Cloudflare and for FSLY. So starting with FSLY, they're trading at an average of 4 over time. Presently, it's 3.5. That's below our catalog average of 6, so it'd be hard to argue that that company is overvalued, especially after that drop. Now, in the upper right here, you have Cloudflare's SVR over time, and you can see it's very richly priced right now at 23. The average over time would be 18, which happens to be our limit. So we take our catalog average, multiply that by 3, so 6 times 3 is 18, and we will never invest in a stock with an SVR higher than 18. So that makes sure we don't overpay for things. So the question, of course, is, should FSLY enjoy the same valuation as Cloudflare, right? And then you can make an argument here that there's value to be had there, invest in shares, and presume that over time that they'll achieve at least much better valuations than what they're realizing right now. Well, based on what we've presented today, it doesn't seem that's the case, and investors see that this is a smaller player in this particular niche. They're not a leader, and they're not growing as fast as the leaders, which are a lot bigger, and growth becomes a lot more difficult to attain when you're large. So it's just not performing as one would expect, despite the fact that they say they have a performance advantage. So always start at the top when you're looking at a thesis, and I think some investors will just look for names that dropped and see what's being passed around like trading cards in social media by social media instant analysts. And what you should do is say, all right, the reason that you're interested in FSLY is because you're bullish on edge computing, as we described that. You acknowledge there's a fierce competitive environment here, and the odds of capturing alpha in that environment are going to be higher if you stick with leaders. Now, you can take the slower growing, runner-up is cheaper approach. You can hope for an acquisition, or eventually their valuation catches up. But whatever you decide to do, have a methodology and stick to it. So our methodology says we only invest in leaders. We wouldn't be interested in FSLY at any price. Now, you might disagree. Tell us why in the comments, and we can all learn from that. And to be honest, I'm just not sure why this stock is so popular when you have a Cloudflare, although richly priced as it may be now, it wasn't before, but they're the leader, and that's where you would probably look to invest if you wanted exposure to the CDN/edge computing story. Now, if you want to learn more about Cloudflare, we did this piece about a year ago touching on the company, and the metrics have changed over time, but there's still some useful bits in there. Please like this video, subscribe to our channel. Thanks so much for taking the time to watch this today.